Hey guys, good morning and happy Saturday. Hope everyone's feeling good today. We're going to have a live session here going over the 5 major red flags to the confirmation strategy, the strategy that I love. It's kept me consistent. It's the only reason I'm consistent. If I was trading outside of that strategy, I may be in trouble. But I'll tell you guys, I found consistency trading this strategy. I teach it to others every day live in our Discord, as you guys know. And if you guys have any questions about this video, feel free to add them in chat, and I will be going over questions towards the end of the video. Just want to make sure everyone can hear me all right. If you can, just let me know in chat. I will be in the day trading chat periodically, but I will be focused on the screen as well. Natty, I appreciate that. Thank you so much. Hope you and the family are feeling good today, and I hope everyone has a great weekend. Joey, I hope you're well rested, buddy. I know that you've got a newborn. And Natty and I know it's not easy, but you're going to lack that sleep, but it's well worth it in the long run. But guys, we're going to get started here. 5 major red flags. This is near and dear to my heart. We have examples in our Discord as well, which I'll pull up. And let me go ahead and do that now. So I'll pull over the Discord for just a moment. If you pull up our Discord and you go down the left-hand side of our channels, and each one of these are going to be categories, you're going to see a category listed as the 5 major red flags. And we have examples for these, and we have a few videos out as well. And some of those videos may be a little on the older side, but they still hold true. It's still the same approach here. And what we're looking for is these 5 major red flags. And the reason they're so important to us is because if those red flags are presented, then we know that there's an issue, right? It doesn't mean it's untradeable. And let's get that out of the way first. Number one, first thing is, guys, just because there is red flags does not make it untradeable, right? It does not make it untradeable. We can still trade any stock, right, with red flags. We just want to be aware of these red flags and make adjustments. So oftentimes, as I mentioned, in the earlier parts of the week, I'm trying to build up my cushion to then use that cushion to be able to take lower quality setups. Well, these lower quality setups that I'm talking about will be these setups that are going to present these 5 major red flags. So you guys will see here 5 major red flags on the left-hand side of our channel list. Open that, make sure that arrow's facing down. Low volume, major red spotted, bullish vertical trend, float size matters, and cluster of resistance. These are going to be our 5 major red flags and something that are extremely important to our strategy. So when I'm trading the confirmation strategy, the first one we'll look at is low volume. And I've got some examples here as well. And I'll pull over the chart. So first thing we look at is, does it have volume or not, right? And it's not a set order. So you can look at the red flags in any order that you'd like, but we'll start with low volume, right? Low volume means that there is exactly that. There's low volume. And the problem with having low volume is it tends to have a wide spread between the bid and ask. So if you pull up the confirmation guide, you guys will see that the bid and ask, that's the bid price, the ask price. And we always say to watch that, especially around that 8 a.m. late prints from 8 to 8:15. But when you have low volume, typically you're going to have a wide spread as well. And a wide spread means when you go to buy, and say if I'm in the pre-market buying the ask and it's at 125, and then you know what, I'm not really feeling the trade, I need to get back out, I'm going to sell, and immediately I go to sell and it slips down to 117. That's slippage, right? That's that spread, that wide spread. That tends to come paired with low volume. So whenever we put a chart out there and I say, there's a red flag here, guys, there's low volume at this time, it doesn't mean it's not tradable. But it definitely means I'm not going to trade it with my full size, right? That is a red flag. And that's what the whole point of this session today is that when we see those red flags, we either adjust or we avoid. Those are our 2 options, adjust or avoid. Because if I'm trading every single setup exactly the same, then I can get myself into a lot of trouble. So having low volume is going to have that wide spread between the bid and ask price. We see this every day, and that's something that's very concerning. When you look at the chart, this is just a quick example on ASNS. I saw this was moving yesterday a little bit. So this area here is labeled as low volume, right? And we can tell that just by looking at the chart. We don't really need to do anything crazy to find out if this is low volume or not, because we can tell by the candles, right? If we have a bunch of these spec candles here, then that's going to be considered very low volume. And if I hover over each candle, you'll see at the top the volume is going to change over the candles. That's 800 candles. 690 volume. There's 800 volume shares of volume. 690 shares of volume. 211 shares of volume. As you can see, right? Very low volume. Now, if I was trading, 50 shares, 100 shares, 200 shares, then maybe that lower volume isn't as concerning, right? The slippage isn't as concerning to me. But if I'm trading 1,000 shares, 2,000 shares, 5,000 shares, 10,000 shares, whatever it may be, if you're trading real size, then volume is going to be very, very important to us. And that's why confirmation is looking for high volume type of moves, because if we're trading low volume, then we're at risk to deal with that slippage, right? And that slippage is going to be that spread between the bid and ask. So if I'm buying the ask in here and then it slips down and I'm selling the bid just to get out of my position, then, I'm dealing with that slippage. I'm taking a loss immediately. So this is just higher risk, right? This section is higher risk. Let's scroll over to the right. We can see these candles, the bodies of these candles start to get a little bit larger, which is nice, right? 5,000 shares, 7,000 shares, 1,000 shares, 2,000 shares, right? Not a lot of volume, right? So for our volume requirements for confirmation, that's not enough volume for us to take these trades. So that means if I'm trading, 5,000 shares and there's only 5,000 shares on the candle, well, I'm providing the full liquidity on that candle. I don't want to do that, guys. So low volume is a red flag to our strategy. It's a very important red flag to our strategy. So yes, there may be a reversal. Yes, this looks like a nice move, right? A lot of traders will come in and say, man, Bob, why didn't we take this trade? This is really nice. Well, because you're not getting filled on any real size and it's very high risk, right? So you can be trading a few hundred shares down here, but for some of us, a few hundred shares just isn't really something that's going to be that rewarding on this type of move. We need a little bit more, right? But it all depends on the size of your account. It depends on, if you have your cushion built up or not. Again, if I'm trading earlier parts of the week, high volume is going to be very important. But if I'm trading towards the end of the week, well, maybe I'll take a lotto or a smaller position after I see these red flags, any lower volume type of position, right? I can take a lower lotto type of position and look for that big stretch move that's going to gap up, but you're just not always going to see that. Now, if I turn this off just for a second, you'll see that, yes, we had low volume in here. Yes, we had low volume in here, and it did end up getting up here, right? It did end up making a huge move. But this is not the area that I'm looking to make my my position, right? I'm looking for higher volume to arrive first so that I'm not providing the liquidity on that stock. And, of course, if I'm trading larger amounts of shares, then, again, I'm at risk of dealing with that slippage due to the bid and ask, right? That slippage, bid and ask price, is going to create that wide spread. So low volume will have wide spreads. We need to be careful of that, guys. So low volume is our first major red flag that we need to look for. And that's something that's very, very concerning. We see a lot of traders that are losing because they're trading these low volume moves and it doesn't pan out. Now, come over to this section here. We can start to see that we're picking up in volume, right? This candle here has 22,000 shares. This one has 20,000, 17,000. There's a 41,000 share candle. So you can see that the volume starts to pick up. So as the volume picks up, well, so can the amount of shares that I'm trading, right? Because it's providing a little bit more liquidity and I'm not the one providing that liquidity. So volume is very important, guys. I'll turn this back on. This is a low volume section. This is a low volume section. It doesn't mean it's untradeable. I want to make that so clear. It doesn't mean it's not tradable. It means that I either make adjustments or I avoid. It's one or the other. I can't trade my full size in this area. I can't trade my full size in this area, right? So low volume is very important. So the next major red flag that we'll go to, let's hop over to a bullish vertical trend. So let me go ahead and zoom in here a little bit. A bullish vertical trend. And this is going to be, again, another example that's from our Discord. So if you pull up the Discord and you go to the major red flag section, you'll see a bullish vertical trend right there. So we have some examples in here, so feel free to check that out. And this is why we add this in here, because, of course, our Discord is for educational purposes, right? We're trying to help others learn and understand, what works, what doesn't work, and why. Now, not just why does it work, or excuse me, not just put it out there like, oh, this is my alert, this is my alert, this is my alert. We'd rather teach you guys the full strategy and have everyone understanding the same bits here. So this is a bullish vertical trend, right? Bullish vertical trend, retrace. Bullish vertical trend, retrace. Bullish vertical trend, retrace. Now, There's no guarantee, guys, right? Just because there's a bullish vertical trend does not mean it's going to retrace like we're seeing in these examples. But what it means is this is a red flag to our strategy. This is a higher risk type of setup. And a bullish vertical trend is going to be 5 or more green bars in a row. 1, 2, 3, 4, 5. 5 green bars in a row in the direction of that we're trading here. That's a bullish vertical trend. That is something that we want to be concerned with, right? So if I pull this back up on the chart, you guys will see that this is an example of that. 1, 2, 3, 4, 5, 6, 7 green bars before it retraced back down. Now, just because we have 5 green bars, again, just like low volume, doesn't mean it's not tradable, right? It doesn't mean it's not tradable. It just means that it's higher risk. It has a red flag. So that means if I'm trading that bullish vertical trend and I want to be aware of that, well, I'm reducing my size. I'm creating a stop loss that's a little bit tighter. In the pre-market session, it will be a mental stop loss. But typically, I'm trying to keep that stop as tight as can be if entering, right? And I'm reducing my size. Or the other option for me is to avoid, right? Avoid this setup and look for another setup elsewhere, or look for another setup that AS&S may present later on in the day. So there's going to be moves that are moving on low volume that, you know, I miss out on. I'm not really worried about those moves because, to be honest with you, I couldn't get filled with enough size for it to make a difference. And of course, you know, you could trade a lotto or something. And towards the end of the week, towards Thursday, Friday, if I've got that cushion built up, well, then I can take these lower quality trades that are going to have these bullish vertical trends or low volume, right? With these red flags. And these are the 5 red flags that we're looking for. So a bullish vertical trend is going to be 5 or more green bars in a row. And if you see that, that's going to be a concern. Now, another version of the bullish vertical trend is anything that gaps up in 3 candles or less over 20%. Right? So, or excuse me, over 15%. So anything that, if you see maybe a few candles, and I'll pull this example over from the guide. This candle right here, it was just a massive candle. So if we have a 1-minute candle that just spikes up, right? Just a huge spike in a 1-minute candle, but it goes up 15, 20% in a single candle, well, then it makes sense that it could use a breather, right? That's a bullish vertical trend. It's too vertical, right, to be trading my full size. It's a red flag. So 2 different variations of the bullish vertical trend here would be 5 or more green bars in a row, or any candle that's 15% or greater. So if you see a single candle that's 15% or greater, or if you see 3 candles or less that equate to a 15% or 20% move or greater, that's going to be a red flag, right? That's going to be another red flag, something that we want to consider and something we want to be careful with, because again, that's going to possibly come with this retrace, right? And we often say this, it doesn't mean that the stock is over. It doesn't mean that, you know, that's it. AS&S got this bullish vertical trend. Well, guess what? It's done, right? I quit out. I'm going to go look elsewhere, look at another name, you know, yada, yada, and we're not worried about this anymore, right? That's not what we're saying. Set your alerts. You know, come in here, right-click, set the alert. There you go, add alert, and then you can have alerts if you start to gap back over this level of resistance, right? But when we see this bullish vertical trend, this is just a huge issue. This is something that if I see that, I'm expecting a breather at the very least, if not a complete pullback. And we can see, yes, this did pull back, but guess what? All of a sudden it popped up, and later on it continued to move. So we don't want to scratch it off completely. We don't want to just say, you know what, had a bullish vertical trend, you know, forget this one. Let's move on to the next name that's hitting the scanners, right? We don't want to flip-flop from name to name to name to name. We want to set our alerts, and we want to be aware of these conditions and adjust based on the conditions that we see. So that's our bullish vertical trend. Here's another example of a bullish vertical trend. And this one, guys, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9 green bars in a row before we start to retrace, right? So it can have more than 5. But once we hit that threshold of 5 green bars in a row, or a 15% move in 3 candles or less, or greater, 15% or greater, then that is going to be a concern. That means that if I'm trading, sure, I can still trade this. Sure, I can still take this trade, but I don't want to trade my full size. This is a red flag, and that means I either make an adjustment or I avoid. It's one or the other, right? So that is a bullish vertical trend. Here's another example over here. We got 1, 2, 3, 4, 5, retrace. There's your breather. Okay, it circled back up, and now it's back up to new highs. That's great. We love to see it. That's what we want to see. We want to see that bullish momentum. But If I see a red flag like this here, that means I may wait to enter, or I may reduce my size as I know that the price is extended, right? This is another version of saying, hey, the price currently is extended. Doesn't mean it's done. Doesn't mean it's over. Just means that it is extended and we are expecting some choppy price action or a breather, right? That's a red flag. So whenever we see these red flags, that's going to be something of a major issue. Next on the list, let's go to the, let's go ahead and knock out the cluster of resistance here. This is our third major red flag. A cluster of resistance right here, as you guys can see, multiple lines and levels, right? And this is just an example. We do have examples in our chat as well. So again, if we go to the Discord, 5 major red flags, cluster of resistance. We do have some examples in here, so feel free to check that out. What this is saying is when we see multiple lines and levels on the chart, which we get all of the support and resistance levels out to you guys, whenever you see multiple resistance levels just above the current price, we're expecting choppy price action, right? 1, 2, 3, 4 lines of resistance, right? Whenever we see a 3 or 4 lines of resistance just above our price that are congested together, this is going to be a cluster of resistance. When we put the charts out and you just see that it's a mess of lines and levels, well, then oftentimes that's going to create a red flag. And that's something we want to be concerned with, right? We're expecting choppy price action. Now, it doesn't mean that it can't get through these levels, right? This is a nasty one. Look at all these lines above this price, right? So, you know, if I'm getting in at this close above this candle, well, I need to know this is very high risk. So again, a cluster of resistance, having these multiple resistance levels congested together just above our current price, that's creating a red flag. That's basically telling me, hey, you know, sure, it could gap up through this, but it's more probable that you're going to see some a bumpy road, right? You're going to see a cluster of resistance. You're going to see a pullback and possibly some choppy price action. So if we see a cluster of resistance, it's okay. We can still trade it. We just want to be very careful, right? So these are going to be those 5 major red flags. So if we see a cluster of resistance, as we can see here on ASNS, well, that is a concern. We can take this close over. Yes, this is still confirmation. I want to make that clear as well. Even though we have a cluster of resistance here, this candle that closed over, right, our resistance level, that's confirmation, okay? This is a lower version or lower quality confirmation because we have a red flag, a cluster of resistance. So because it's a lower quality confirmation, yes, it's still confirmation. Yes, we're still looking for continuation. Yes, it could break highs, but it is probable that we're going to see choppy price action. So I may want to reduce my size, right? And that's what we're trying to get across here. We're making adjustments based on the conditions that we're seeing. And of course, we do have the indicators that will plot that for us. We'll go over that in a minute. But a cluster of resistance is 4 or more resistance levels that is just above your current price. So if we're trading at this candle over here, you know, we know that we're expecting choppy price action, and that's what we're getting. We're getting this choppy price action. Why isn't it just bulling through and just continuing up and just, you know, higher, higher, higher? Well, a lot of that could be this cluster of resistance. And just to be clear, a cluster of resistance, these are going to be previous resistance levels. You know, these are levels that other bag holders, and I'm sure we all know the term bag holders because we've all been one. Bag holders are traders who bought, you know, in previous times, way over here, right? And are holding those bags, right? The price gapped up over here. They got in. It faded off. They didn't sell because, you know what? They're thinking, I'll just hold on to it. It's going to curl back up. Well, it didn't for a while. So they're holding that bag. And maybe they're averaging down. But what's happening is because they're buying in this area, it's creating a resistance area, right? Because when we reach that area, they're going to sell their shares. They're bag holding, right? They're holding those bags. They want to get out of the position. So if they've been holding for a while and they start to see that they're now flat on their position rather than down 20%, why wouldn't they take that or sell that position, right? To just end it flat and not be down anymore, right? They recoup the loss. Or the other hand, right? Maybe they're making some money. Maybe it's up. Maybe they're green on their position. Maybe they bought on this level here and it's you know, popped up here and they're considering, you know what? I've been down for so long. I'm a bag holder. Maybe I should take some profit finally that I've been waiting for, right? So those bag holders are creating a mixed signals in here. They're creating a lot of choppiness, and that's what we're expecting is choppy price action. So if you see a cluster of resistance, then you're expecting choppy price action. And that means, yes, we can still trade it. A confirmation close over is still a close over. This is still confirmation. It's just a lower quality version of confirmation, right? So we can assess each one of these conditions and assess each one of these trades and say, you know what? Is this going to merit a 5,000 share position? Yes or no? Is this going to, and if not, is it going to merit a 2,000 share position, a 1,000 share position, 500, a lotto maybe, or a few hundred shares, whatever it may be. Of course, again, it's going to break down to the size of your account and if you have that cushion or not. So if I was trading on a Monday and I saw that this, gapped up, closed over that level, well, maybe I'll take that trade, but very little shares. I'm not going to, this would be a lotto for me. But if this was on a Thursday or Friday and I've got that cushion built up, well, maybe I can take this a little bit more with a more aggressive size order, but I still don't want to trade my best size order, right? My top size order, because this, again, is a red flag, right? So red flags are stacking up. This is a cluster of resistance, and that is another red flag that we have. Major reds spotted. Let me pull over the major reds spotted. I'll pull this up. Again, in our Discord, 5 major red flags, major red spotted. Okay, we do have some examples here. You can see this major red flag right here, major red candles, major red candle. Okay, a major red candle, right? And I have some examples here on the chart as well. This is one of them. A major red candle is any candle that pulls back and is negative 4% or greater. So if you see that a 1 minute candle pulls back 4% or greater, that's going to be a major red candle, right? Something that we want to be concerned with. If you hover over these candles, you can see at the top the percentage lost or gain. And you can see if I hover over this candle here, and I'll turn this off just for a second, this is showing a negative 5.79% loss, right? So a pullback of over 5%, almost 6%. This is a major red candle, and that's going to be a concern. If I turn on our bullish our BB volume major red vertical trend spotter indicator, right? Turn this on. It would automatically let me know, do we have volume? Yes, we have volume. Do we have major reds? Yes, there's our major red. There's our major red. So we can quickly assess and see major red, major red, major red. And what that is telling me, right, is that this stock, if trading it, right, if I get into this position, I can expect those major reds to possibly show themselves, because in previous price action, as you can see here, 1, 2, 3, we are seeing those major red pullbacks, right? So that is going to be a red flag to my strategy as well. If I'm entering this position and I see that we've got major pullbacks, right? This one's a 5.5% candle, almost 6%. Well, then I want to factor that into my position, right? So if I'm getting into the position and it gaps up over my level by 5%, so I get in and I'm already up over my key level by 5%, but then it comes back to the level and it's testing that level, but then it falls down a 5% candle, I could be losing 10, 15% on a single move, on a single trade, right? So this is a red flag. This is something that I want to be concerned with. If I see multiple red flags, which some of these stocks will have more than others, if you see multiple red flags like this, well, again, I may want to reduce my size based on those conditions. Now, I will say that red flags after a type of move like this, guys, right? This strong bullish move that we have here. Of course, a red flag is definitely going to be, something that we could see. It's probable, right? Because it had such a move that a breather or pullback would make sense. But once we start to see multiple major red candles and major red flags like this, that means I need to factor that into when I'm trading. So if I'm trading this, again, same idea, guys, I need to make adjustments or avoid. Those are the only two options I have. So if I see a whole bunch of these major red pullback candles, these major reds we call them, well, then I need to make adjustments. So instead of trading 5,000 shares, maybe I trade 4,000, maybe 3,000, right? Maybe 2,500, maybe less. So we're making adjustments based on the conditions that we're seeing, and this is going to be one of those major red flags. Is going to be, of course, the pullbacks on the chart. So if you see these pullbacks that are 4% or greater, that is an issue. And you can see that with our indicator, you can easily spot that. Now this is 8 a.m. late prints, guys. This is going to be TradingView late prints. Disregard these alerts from 8 to 8:15. Again, keep an eye on the bid and ask price. This is going to be something that you don't really want to factor in when you're looking at the major reds. But zoom on out. ASNS started with a major red, major red, major red. And this major red here, guys, followed by, this was a bullish vertical trend, right? That's spotting, our indicator is spotting that for us. And it's letting us know, hey, there's a red flag here. There's a pullback. There's a red flag there. So sure, you can trade this. Yes, there's low volume. If there was high volume, we had adequate enough amount of shares for volume, then we would be seeing these yellow and white candles. If we're seeing red and green, well, that means it's too low a volume for me to take the trade. If I take the trade with too low a volume, I'm taking an extreme high risk type of entry, and there's no way I want to trade full size, right? So we want to be careful. Excuse me. So, bullish vertical trend over here. Yes, we can still trade it. That is a red flag. We do have major red candles. There's one there. There's one there. There's one there. Easily, right? We can spot that very easily. And now we can know, okay, we need to make adjustments. So sure, it made a really great move. Love it. But maybe I'm trading smaller size, right? Because of the risk that's associated with this setup. So this is one of our major red flags here, guys. Major red candles, major red pullbacks, whatever you want to call them. We call them major reds. It's going to be a candle that pulls back 4% or greater. Some of these, this, I have to say, a 5.5%, almost 6% pullback is not crazy, right? For the type of move that we're seeing here, it's not that crazy. But if you see enough of them, it starts to factor into my position. Now, some of these red flags you will see are nasty. I mean, you will see sometimes if you pull up a chart and you see that it has multiple red flags, some of which are negative, 8%, 10% or greater. I'm telling you guys, that is a huge, huge red flag for me. If I start to see that the average red flags are more than 7, 8%, I've got to be careful because, I basically have to plan on getting into my trade. There's no sure thing. It could pull back 7 or 8%. And it's showing that in its history. It's doing it quite often. So that means it's definitely probable, right? It's definitely something that I need to plan around. So again, we are risk assessors. That's what we are. We're not just day traders, right? We're risk assessors. We are assessing the risk. This is high risk. This is high risk, right? So yes, we can trade this stock. Does it merit my full size? Probably not, right? And that's the point we're getting across here, guys. Not all trades are the same. It's the same with anything. Not all trades will be the same. Not all conditions will be met. So when you see these type of conditions, just be careful and, of course, make adjustments, or I like to either make adjustments or avoid, depending on the day of the week, whether I have my cushion built up or not, whether I'm red or green on the week, it's going to make a big difference. So our final major red flag that we have here, the final major red flag is going to be the float size. We don't have any examples in here because it's pretty self-explanatory. The float size is going to be a major red flag, something that we want to consider. So if we click on this details page on the side and click this down arrow, then this will show us the shares float. This is according to TradingView. Of course, we will always want to check this with our trade idea scanners as well. We want to cross-check those and make sure that they're accurate. But share float here, 4.6 million share float. Okay, check. That is good to go, because a red flag to our strategy for when trading confirmation, and you guys can mark this down if you haven't already, but if you're trading confirmation, we want to be trading, our best setups will happen between 1 million share float to 25 million share float, right? So between 1 and 25 million share float, that is our sweet spot. So if all the stars align, right, we don't have major red candles. We don't have a bullish vertical trend. We don't have a cluster of resistance above on this chart. We don't have these red flags. And we've got the proper float size and volume. It's just a lot of check marks, right? It's like we're making a checklist. And we can say, does it have volume? Yes, it has volume. We can tell it has volume. It's got these white candles. That means it has volume. Yes, we're good. Okay, great. All right, is the float size met? Yes, it's 4.68 million share float. It's between 1 and 25 million. Now, the reason we say between 1 and 25 million is because this strategy is optimized with that range of float. If you're trading stocks that have a float size less than 1 million share float, we consider that a micro float. And a micro float is going to be very, very whippy. Very choppy, or whatever you want to call it. It's going to fluctuate both up and down very fast, even on low volume, because what's happening is the shares float. That's how many shares are available for trading at that time. So if you see that the share float is only 500,000 share float or less, a million share float or less, then what happens is, if Joe Schmo comes in and starts pushing around 20,000 share orders, it's going to actually push that price needle up and down quite a bit. Right? So the lower the float, the more fluctuation you'll see in the price, even with lower volume. It doesn't take a lot of volume to see that volatility. If the float size is greater than 25 million share float, then the opposite is true. It's the same thing. It's got, it's got too great of a size float. There's too many shares available for trading. And that means that when you're trading that stock, it's going to require more volume to really push that price around in a comfortable type of setting. Now, if you see a float size over 25 million share float and you see that it's moving up, but it has very low volume, well, check that spread, guys, because you'll notice that there's going to be a very, very wide spread on the bid and ask price, that number between the bid and ask price. So you may see, for an example, you may see that this stock here is hovering around $2, and it's got but it has a higher float, like a 50 million share float, and it's around $2. Well, it may gap up to $2.15, but you may look at the volume and say, man, I did it on 3,000 shares. But then if you look at the bid and ask price, you'll see that the ask price is at $2.15, but the bid price is still down at $2. So if you just smash that buy button, you're getting filled around $2.15. Well, if you then smash the sell button because you are not really feeling the trade, it's no longer fitting your requirements, well, guess what? You're going to deal with slippage. So even though it looks like it's moving, right? Even though that the chart looks like it's moving, it depends on the volume and the float. So if we have a float size between 1 and 25 million share float, that is our sweet spot. That's what we're looking for. That's what we want. If it's below 1 million share float, we consider that to be a red flag. That's going to be considered a micro float. So under a million share float, guys, that is a micro float, and we're expecting choppy price action. Now, I will say that the lower the float, or the smaller the float and the number of shares available for trading, the faster the moves can be, especially if volume is paired with it. So if you see a float size that's only 500,000 share float and it's got over 100,000 shares of volume on a 1 minute candle, well, guess what? It's going to be fluctuating quite a bit because it has high volume and it has that micro float, that tiny float that's going to push that price needle around very easily. So float size matters, guys. It makes a huge difference. I'm telling you. So our strategy confirmation is optimized for stocks between 1 and 25 million share float. 1 million and 25 million. That's our sweet spot. Above 25 million, confirmation still works, but results drop off. And for stocks that have under a million share float, confirmation still works, but results drop off, right? They're not optimized for that size float. So if you're looking to get the most out of confirmation and the most out of the strategy that keeps me consistently profitable, then I would suggest that you look at these red flags and either make adjustments or avoid, right? Those are the two options that we have. So, if we have multiple red flags, now this is a singular red flags by their themselves, but pair them together. Say you see that it is a micro float and it's got a bullish vertical trend and there's a cluster of resistance, right? And there's major red flags before. Well, that checklist, you're not really checking off all of the boxes for this to be an A+ or your best setup. So when we're risk assessors, right, and we're assessing the risk and we're seeing red flag, red flag, red flag, okay, well, we either make adjustments or we avoid. And oftentimes you'll see that I will avoid. And there's going to be stocks, guys, that go up without you. There's going to be stocks that go, flying off the hinges without you. That's okay. I mean, I know it's hard to swallow at times, but that's okay. You either make adjustments or you avoid, and you have to be okay with that decision. Now, you can always, make notes and backtest different strategies to add and implement with this strategy, but confirmation is very cut and dry. Close above our level paired with volume is bullish. That's one signal. Add that to the other signals that we're looking for here. Does it have a bullish vertical trend? No, it doesn't. Okay, check. Is it a cluster of resistance? No, it's not. Okay, check, right? So we're looking for these red flags. We want to assess these red flags as soon as possible. And that's why, guys, we build the indicators. That's why we build the strategies into indicators, because it just makes it so much easier, right? By having this on here, without having this on, if I turn this off for a minute, hide all, you just looking at this chart, it's not easy to be able to see, is there any red flags, major red pullback or candles? You'd have to hover over each one. Okay, there's one there. Okay, let me see over here. Is there one there? No. Yes, there is actually. Excuse me. This looks like a pretty big candle here. Is that a pullback? Yes, negative 6.5%. Okay. This one here, that takes time. There's nothing wrong with that. Nothing wrong at all. That's what we did for years before we built these indicators. But now we do have the indicators built that if I turn this on, you'll notice that we'll be able to quickly tell, is there red flags, is there major red candle pullbacks, and is there volume, right? Turn this on, and voila. Okay. Yes, this made a nice move. No, it did not have volume, so it have to reduce size. Yes, it had a red candle, major red pullback. Okay, that's concerning. So low volume. We can see this. We don't need to assess this because the indicator is letting us know for us. So yellow candle, okay, we're getting some volume. There's our volume pop. There's our first volume pop of the morning, really. So maybe that's an entry for you just because you see that the volume is there. Okay, take a smaller size due to the conditions elsewhere. And you can see now a bullish vertical trend. Maybe you want to secure some profit. So that's the other side of the coin, guys. Maybe you're in your position. Maybe you already took your position before these red flags presented themselves, right? Maybe you got in before you saw a red flag. Awesome. Nothing wrong with that, right? You're able to trade larger size. Well, when you start to see these red flags, it's a good idea to possibly secure some profit. And you guys know this. I love to secure my profit. Oftentimes, I like to scalp the bulk of the move. So I like to take out 75% to 90% of the move. So if I got in this candle, I may be out on this candle 90%, right? But I may be holding a lotto in case we feel there's continuation. So sometimes these will set up where we want to be in that stock for that bigger move, for that long trend up, right? And we can do that. But of course, if I'm seeing these type of conditions right here, and these are red flags to my strategy, and I'm already in the position, well, then maybe that's a good sign for me to start to secure profit. And if I, bought the bulk of this candle here, took the bulk of my profit here, took the remaining profit into this bullish vertical trend, we pull back, well, guess what? I'm happy with the decision. Now, yes, the stock did curl up and continue later on. It did, right? So on your lotto, you could always put a trailing stop, or you could put some kind of ATR stop or whatever. You could put a stop loss on it where you could give it some wiggle room, right? You've already secured profit over here. So if you want to hold for this bigger move, you can do that because you've already secured profit. We've already took profit off the table. So we're not bag holders, right? We don't want to be bag holders. We want to get in, get green, and get out, or just get out of the way, right? And ASNS is a good example of this. We can see multiple red flags. Yes, if you got in and held this position, sure, it worked out for you. But the other side of the coin is there's a lot of traders that just traded this section, got in, got green, got out, locked it in, shut it down. And while others are trading throughout the day, here at 10:30, here at 11:40, here at 12:30, sure, it made a nice move. But these traders that made their bulk of their profits on this move right here and exited the market as a whole, took their profit and ran, guess what? They're not really bent out of shape about what's happening after. No one really cares about what happens after. What we care about is what happens when we're in the trade. So if you're in the trade and it works out and you make money and you lock in your profit and you shut it down, well, this is all before market open. You're done. You're done trading, right? You made your profit. You got out. You assessed. You made adjustments, you took profit, you got out, and then of course you could always set alerts in case it starts to break over key levels throughout the remaining session of the regular market session, right? So you can always set alerts if you're glued to the screen and want to trade all day. A lot of traders, and myself included, I like to get in, green, and out in the pre-market session. I trade from 7 to 10 a.m. every day. That's my window. If I'm not green by 10 a.m., typically I either need to reduce my size or just get the heck out of the market because by then I start to give back profit, especially if I'm already green. There's no sense in me continuing to trade. It's not about getting more green trades, right? It's not about getting more of those green trades. It's about just being consistent on the green trades, right? If you had 5 green trades here in the pre-market session, then you don't need to trade 5 more times in the regular market session. You just could have increased your size and made your bulk of your profits in here. But of course, that's going to come with experience. That's going to come with, again, the size of your account, if you have the cushion or not. So that's all going to be, more of an individual type of race there. But I'll tell you guys, stick to your strategy. This strategy here, confirmation, is For me, it's everything. It keeps me out of trouble. In the earlier parts of the week, this is my go-to. This is what I'm looking for. Now, of course, all week long, I'm looking for confirmation. I'm looking for the strategy to set up. But I will say that, confirmation strategy is not going to give you an A-plus type of setup every single day, right? Some weeks, we're lucky if we see an A-plus setup once or twice a week, if that, right? So just because the strategy is consistent, just because it's high probability, doesn't mean that it's going to give you a setup frequent. It's not going to be frequent buys and sells all the time. So that's why we develop other strategy too. In case you guys are trading throughout the day, we understand that there is traders that are trading throughout the day. There is opportunity. We don't want to discredit that either. Just because, maybe I made the bulk of my profits here and I'm happy with it and shut it down, that doesn't mean that it's not tradable throughout the regular market session, right? That doesn't mean it's not going to make a move. That doesn't mean that the stock's over. I can't predict that. No one can. This strategy is not about predicting the future. It's not about predicting anything. This strategy and these 5 major red flags is so important because what it's doing is helping me risk assess, right? I'm assessing the risk and I'm saying, you know what? It's got all these red flags. Yes, I can take it. I have to take it smaller size. So maybe over here, because of all the conditions that we saw previous, maybe I took a smaller position and just said, you know what? I'll take a lotto. 500 shares here. I'll leave the lotto. If it goes against me, then so what? I end up losing on 500 shares rather than 5,000 shares, right? So just minimize the size, make adjustments, and that's what these red flags are telling us. So make an adjustment here. Yeah, maybe I only took 500 shares, but maybe I'll hold for a bigger type of move. Maybe I have a target up here somewhere. Maybe there's something I'm seeing that I think that it may get to. Well, okay. In order to stick to that, I take a smaller position because of these red flags that we're seeing. Those are the 5 major red flags. And sure, the trade worked out for us. It is more probable that the trade will not work out for us. But guys, we've seen it plenty of times. It will, a lower quality setup like this can still provide a high quality result like this. It can happen all day long, every day. It can always happen. And I will say that more times than not, you're going to see low quality setups present themselves, right? You're going to see more low quality setups present themselves. Now, again, this is just a personal rule. Everyone's different. Earlier in the week, lower quality setups, I either greatly adjust my size or just avoid it or just don't take it. And what's tough about that, I'll tell you, what can be tough about that is, say on Monday it's a crappy setup. Say on Monday we get a bounce watch that just shoots up, makes this huge move and it's just incredible, right? It's a beautiful move. Maybe it's this crappy setup here, but it ends up going up here. Well, if this is a Monday, I might miss out on that. It depends. I may miss out on that. Of course, it depends on a lot of factors. But on a Monday, Tuesday, I may miss out on the bulk of this trade right here. So, it may not be for me. And everyone, and their moms are going to come in and say, I took that trade. I made $1 million. You should have too. Well, there's nothing wrong with taking the trade. It's just a matter of making adjustments, right? You can still trade this on a Monday. It's just a matter of making adjustments. Now, me, again, for a personal rule, this is a personal rule, not a rule to our strategy, but a personal rule here is on a Monday, on a Tuesday, I prefer to trade confirmation. I prefer to trade bullish momentum, something that's breaking out of its highs, breaking out of its key levels. That's what I prefer. Just because I prefer that, you think the market cares? The market does not care what I prefer. But I don't care what the market cares about, right? We're mutual in that. We have a mutual agreement, me and the market, right? Market doesn't care about me. I don't care about the market. What I care about is my strategy. What I care about is my account. What I care about is my profit, my losses. Keeping those losses tight and letting those profits and winners run, right? And that's typically what we're looking for and what we're looking to do. So, guys, these are the 5 major red flags. Again, pull up the Discord. On the left-hand side, major red flags here. Just make sure that that's facing down, each one of these categories. You see low volume, major reds, bullish vertical trend, float size matters, cluster of resistance. These are our 5 major red flags to the strategy. They're so very important to me, and they have made a world of difference in my own trading. Because if I was unaware that this had a bullish vertical trend, well, then maybe I'm oversizing my trade, and maybe I'm getting caught. Same thing with here, right? What happens here, guys? What happens if you didn't realize this was a bullish vertical trend? You took full size on this candle. Yes, it went up a little bit. You took a little bit of profit. All of a sudden, boom, it knifes down. If you got in this candle or this candle, on these bodies here, you're taking a hefty loss on that pullback, right? And then it gaps back down. You're sitting there scratching your head, being like, oh man, trading is terrible. I can't figure it out. All of a sudden, it curls back up, and you feel like you missed out. The FOMO kicks in. You start making poor decisions. I'm telling you guys, don't let that happen. Stick to a strategy. For me, that's confirmation. Love it. It's what keeps me consistently profitable. And, when trading outside of that, it's just higher risk. So there's nothing wrong with trading outside of confirmation. I'm not saying that confirmation is the only way you're going to make money in this market. That's not what I'm saying one bit, guys. Confirmation is how I've found consistency in this market. And I love it because I've been trading for years now. I've traded all different types of strategies. And to be honest with you, the bulk of the strategies that I've traded have been very inconsistent. That is a problem for me. I really strive on consistency. I really love and just look for consistency rather than inconsistent type of moves. Sure, I can hit home runs on these type of plays that are going to be less consistent, but I also can, really put myself in the hole there. And the last thing I want to do, guys, is take these type of trades too large of a position. Say on a Monday, I take a crappy position, and then all of a sudden it goes against me, and then I'm down, a few $1,000 or whatever on a Monday. Because then all I'm doing is building myself or digging myself into a hole where the rest of the week, instead of me making profit consistently, instead I'm working on trying to pull myself out of the hole that I dug, right? So, there's going to be trades that we miss out on. It's no big deal. It is what it is. If you do take trades that are going to be higher risk like this with these red flags, no big deal. Just make adjustments. That's what we're trying to get across here, guys. So doesn't mean you can't trade it. Doesn't mean it's untradeable if you see any red flags. Even if you see all 5 of the major red flags, doesn't mean it's untradeable. A close over our key level is still bullish momentum. It's still confirmation. It's still continuation. And it's still worth watching. Just means that it doesn't merit the full size. So, guys, that's the point we're getting across. I hope that helped out. This is a quick example of the 5 major red flags. And for now, guys, I'll open it up into the chat. I'll pull up the chat on my end and be more than happy to answer a few questions. If you guys have any questions about this, feel free to ask. Sheldon, what example would you say is a clean stock to trade? Well, an example of a clean stock to trade or a clean setup, if that's what you're asking for, would be you don't see major red flags. So oftentimes we're trading in the pre-market, right? Oftentimes we're in the pre-market session. And so what happens is we are getting the news fast. We're getting the volume fast. Our scanners are top notch. So you're going to find that the stock is moving in the right direction very, very fast. So what you're looking for in that case, right, if we see this hitting the scanners, what you're looking for is it to close over our key level. So this over here, this is a good example. So this, say we had, and this is just an example here, Sheldon. This is not going to be our key level that I'll put here. So say it closed over here. Let's disregard the fact that it has this. Let me turn off the indicator for a minute. Because we're going to act like this was a clean setup, okay? This is going to be a clean setup. So didn't have a bullish vertical trend. It popped up, okay? Disregard all of these red flags we see. Say it popped up over our key level. So we put all of the key levels in the chat in the morning. If you guys check that out, if you go into the chat here and you go to the, let's see, the premium features, key levels, all of our key levels are added here in the key level channel. You can see that yesterday we had 1, 2, 3, 4, 5, 6, 7, 8, 9 of those. So what I would suggest is setting 9 alerts. Set those alerts. And I always say right here, set them below the key level. Set your alerts below the key level. So if the key level here on NXL was 337, then set your alert below 337. Set it at 320, 325, or 315, right? Start watching as we approach. And you can always set a couple alerts. You can set one right at the key level, and you can set one below the key level. So that way you can better assess the conditions. So say we had an alert, right? Say I put the alert in chat, and it said AS&S needs to close over 169. Say we closed over 169. We have the volume requirements met, right? We've got volume, check. Okay, we've got our key level, it closed above. Okay, check. We don't have other lines and levels above. Okay, there's not a cluster of resistance. Check, right? We have, let's see, we don't have any major red candles pullbacks yet because, again, we're catching a lot of these moves. We're catching early in the morning, and so you're not going to see that right away. That's going to be a little bit after. So you don't see that major red candle. Okay, check. That's good. So that's going to be the type of setup that you're looking for higher quality versus lower quality. And so that would be a higher quality example rather than something that's going to provide, after we see those major reds, we see that there's low volume, and we see that there's a cluster of resistance like over here. So this over here would be a higher risk setup, right? So does that make sense, Sheldon? Does that answer the question? So a higher, basically, it's, you know, this is a checklist. So these are our red flags, 5 major red flags. If we're not seeing those 5 major red flags, that is a higher quality setup. If you see 4 of the 5 major red flags are not there, right? There's only 1 major red flag. Maybe it's the float size, or maybe it's there is major red candles. Very often you'll see that there is major red candles in the past, but you've got volume, you don't have a bullish vertical trend, you don't have a cluster of resistance, you closed over the key level, that would be a higher quality setup, right? So we're just trying to break it down and basically say, you know, one setup is each setup will be different. You know, the market is just wild. It's just like us, guys, just like humans, right? Every setup that we see is different in some way. There's never 2 setups that will be exactly the same. Every setup that we see, there's going to be some kind of a difference there. It's on us to quickly assess the difference and make the adjustment based on the difference that we see. If you see that, you know, these 5 major red flags are not there, and we've got the volume, we don't have a cluster, we've got no major red pullbacks, we've got, you know, if you see that none of the red flags have presented themselves yet, that's great, right? That's a higher quality setup. I would say that the most common of the 5 major red flags, so the most common one that you'll see and is okay to see, would be the major reds, these major red pullbacks, because it's pretty typical, especially on the price. That's the other thing too, guys. The price will factor in. So if we're trading a stock that's, you know, $25 and up, then a pullback of 4% is a pretty large pullback on that type of candle, right? Or that type of price. If you're trading a stock that's, you know, like IONM, which was a cheapo the other day that I was trading. Let's see if I turn this back on. Then it's very typical that you will see these major red pullbacks, right? This is going to be typical, and the reason for it is because a major red pullback on this thing. I mean, if I take this from there to there, you know, we're from 42 cents to 39 cents, right? 42 cents to 39 cents. That's a 7% pullback. So the cheaper the price, the more often you're going to see the major red pullbacks. And again, guys, I would say that the major red pullbacks like this here is probably the most common of the 5 major reds. It's the most common one that you'll see of the 5 major reds. I think the biggest mistake that a lot of traders make when trading this strategy is trading with lower volume. So if you're trading with lower volume and you think it's confirmation, well, you know, it's a very big mistake, because you got to make adjustments for lower volume. Just because it closes over the level, but it does it with 2,000 shares, does not make it high quality. It makes it actually the opposite. It's low quality because of that. But I think the most common red flag that you will see is going to be the major red pullbacks, the 4% negative candles or greater. So that's pretty common. You can see that and still get high quality setups throughout the day, right? You can see that and still get high quality setups. If you see that in a cluster of resistance, then, you know, you're knocking the quality down. So every time you see a red flag, you are knocking the quality down, and that is an issue for our strategy. Oh, awesome. Awesome, Sheldon. Yeah, if you guys have any questions, I'm here in chat. I'm going to hang out here for a few minutes, and I'm more than happy to go over some strategy with you guys in the 5 major reds. So another thing that I would say to you guys is that, you know, once we fill a gap, this is not included in this yet, and I think I need to possibly add that. But, you know, the biggest thing, and I think a lot of you know this, Joey, I know you know this, Natty, you know this as well. The close above a level, if we fill a gap, right? Let me just put an example here. Let's see. If we do it like this here. All right. So if this was where our gap was too, well, we're not taking trades in here. Say I lower this down just a little bit. Say this is where our key level is, right? It's at 68 cents. And I'll turn the indicator off again for a minute, make it easier. So say this is our key level, right? It was 68 cents. And their next level is 71 cents. But we have this candle here that gaps up and closes the gap, closes that gap, right? That means that it filled the gap, closed the gap, whatever you want to call it, means that the gap has filled. So if we're gap traders, we're looking for these gaps to take advantage of. That means it filled it. So that means that this would no longer be confirmation if it closes over 68 cents. It then needs to close over the next gap filled, which would be 71 cents. So that means this candle right here, even though it closed over that key level, this gap already filled. So this would be a low quality entry because this is high risk because we already filled the gap. And this is something that we'll be adding to. We're actually designing a class right now, a full course on our website that's going to be for confirmation. That's going to be very, very detailed, have video tutorials. It's going to have chart tutorials. It's going to have everything. It's going to be really, really great. We're working on that, and this is going to be included in that. So when we fill this gap, which we have on this candle, then this close over is a lower quality version of confirmation. Confirmation really is looking for now a close over this level because we've already filled the gap right here. So we're gap traders, right? If we've got a predetermined resistance here, or say we have a predetermined resistance up here, I'm not sure what I just did there. Let me see if I can, there we go. So this gap here, guys, excuse me, this gap is the gap that we're looking to trade. If I'm looking to get in above 71 cents, I'm looking at our next resistance level as a possible target or exit signal, right? And this is the gap we're looking for. So if we're closing over this gap, well, this is not where I want to trade it. I want to look for the close over the next level. So there we go, closed over. Okay, failed. They will fail at times. Did not fill the gap yet, though, so this is good. This is still our key level. Closed above. There's our close over. There's our fill, right? There's your fill. There's your move. That's your scalp. Hold the lotto in case you feel this continuation. If it closes back below this level, that's bearish. We get out, and sure enough, it did. And this is another thing that I see a lot of our traders struggle with. Once it closes below the level, guys, that's our exit signal. There's no and or if buts about it, right? There's nothing. If it closes below our key level, our support, then we get out of the position. I can't hold on to it. I can always get back in if it closes above its resistance level, which now would be this top level of 75 cents. So if we pull back here and close below, well, I don't want to take a loss here. Maybe I get in over here and I took a loss. Yeah, it sucks to take a loss there, but, it's better to take a loss here than to become a bag holder and hold all the way for down here, right? We don't want to be bag holders, guys. We're not doing that. That is not what we're doing here. We're not holding these positions overnight. We're not holding these positions sometimes even for hours. Sometimes it's it's minutes or less at times, right? We don't want to get into these positions and hold on and just keep hoping and hoping and hoping, because the market doesn't care about your hope. It doesn't care about what you think. It really does not care. The strategy is what's important. Sticking to the rules of the strategy is important, right? Sticking to these major red candles and red flags is important, right? So AS&S, as we pull this up, there's prime examples here of all of these red flags. We come under here and we say, maybe I want to take this trade over here, and I'll take this trade. Nobody's really talking about it much, but I'll take this trade. A little pullback, right, from its highs. This should work out. Should be good. Sure, it worked out. But, what size are you trading? It's such small size that, honestly, it probably was more risk than it was reward. So we want to keep the risk to reward ratio pretty high. We want to stick to our consistency and our consistent strategy, and we don't really want to veer off that path, because if we start veering off that path, well, you start becoming one of those bag holders, and unfortunately, I probably won't see you trading with us in a year or two. So, guys, stick to the strategy. Stick to what keeps you consistent. Make adjustments. I just want to get that. I want to make sure that is very, very clear. When we see red flags, it doesn't mean it's untradeable. It doesn't mean you can't trade it. It means you either make adjustments. Those are our two options if we see red flags. You make adjustments or you avoid. You make adjustments or you avoid. That's it. That's all you can do, right? And, of course, there's going to be stocks that go up without you. Every single day there'll be a stock that goes up. Every single day there'll be a stock that goes up. But it may not meet your requirements for your trade. It may not meet those requirements. And you may sit there and say, you know what? Then the requirements are too, tight. They're too, whatever. I want to be able to take that trade. I want to make more. That's great. You can do that. But confirmation is consistency. Confirmation strategy equals consistency. So if you can stay disciplined, if you can stay patient, then you're going to see consistency in your trading. If you start to veer off that path, you'll notice then losses can sometimes occur, right? And again, I'm not saying that confirmation is the only strategy out there that's available for making money in the market. Just it's the only strategy that I found pure consistency in with trading this strategy. And with that being said, I want to make sure that this is clear. There's never a strategy. There's not a single strategy out there that's 100% accurate. Even if it shows a 100% accurate results from previous results, it's not indicative of what can happen now, right? You need to make sure that you're still adjusting for what's going on exactly in front of you right now. So even though it shows that, this strategy was 100% accurate before, doesn't mean it can't have a slip. It doesn't mean it can't slip up. So our strategy, number one, is based around consistency, but it's also based around avoiding major losses. You're not going to take major losses sticking to the rules of the strategy because it is designed to be optimized on these type of stocks and designed to avoid that altogether. Your struggle is knowing when going to be bearish after run, not normal, negative candle breather. Awesome, Sheldon. Yeah, that's exactly right. That's exactly right. So it's just we're playing this game, right? We're playing this game like it's like bump up, bump up, bump up. Okay, resistance, bump down, bump down, bump down. We need to get back over resistance. Over resistance, we can bump up, bump up, bump up. But it's if we have to have everything in line. And that's why I say it's not easy, guys. We were doing this for years before this. I was marking charts manually for years. I was pinpointing the major red candles, the volume, right? I was looking at volume. I mean, the volume that you typically would have on here would just be, let's see, I don't know if this is, I don't know how to add the volume. I took it off, so I'm not sure if this does it or not. Yeah, there we go. So that's the typical volume that you would see, right? I'll turn this back off. Let me turn off the drawings here. So this is the typical volume. There's nothing wrong with that, right? There's nothing wrong with that. It was just harder for me to see whether a candle had the requirements or not. So we built our strategy into an indicator and multiple indicators that will now give you the direct answer. So you don't have to look at this. I don't have to, because even though it looks like there's high volume, doesn't mean it is, right? We can still hover over these and still say, maybe this has low volume, this one has low volume, right? So maybe, looking at these is just not enough, right? Yes, it's increasing in volume. Yes, I like to see that. But, we don't need to see that when we have this turned on because it's already telling us, hey, yes, there's your first volume spike of the morning right there. There's another one there, excuse me. So yellow candles, white candles, that's letting us know the volume is there. Indicators are letting us know. Bullish vertical trends, yes, we got a bullish vertical trend. Okay, I can still trade it, just want to be careful. Major red pullbacks, okay, there's our major red pullbacks. Need to be careful of that as well. And that's going to give us a heads up on all of our conditions based for our strategy. Yes, Natty's exactly right. Patience is key, guys. Natty knows this. Natty's a trader who's been doing this for a while. And Natty, I know you know just as well as I do, the market will completely humble us, guys. I promise you that. As soon as you get, overconfident in this market, it finds ways to humble us. So, it's not easy. It really isn't easy. I think the hardest part for confirmation strategy, honestly, the hardest part is staying patient and staying disciplined. Thank you for watching today's live session that we have bi-weekly in our Discord. If you'd like to join our Discord, feel free to check out BullishBobLive.com, and I'll see you in the chats. Thanks, guys.